This is Open Mic, where there are no jargons, no filters, just direct answers to direct questions. The fiscal landscape is shifting fast, with the new tax law driving the gig economy, remote workers, and crypto space. They are now within the tax net. But how exactly are you supposed to comply with the rules when it seems to be for just the traditional 9 to 5? Today, we'll be answering all the questions you sent to us about what the tax compliance means for the gig economy. Joining me on the hot seat is the man running the tax affairs of the Kaduna State Internal Revenue Operations as the Executive Director, Revenue Operations, Dr. Mohammed Lawal. Doctor, you're welcome to the show.
Thank you for having me.
To go ahead with this conversation, we need to establish some questions, get some questions answered within this space. And I understand you are the expert here, and we'll need you to help us break down these questions we'll be asking. To go back, what set of persons make up the gig economy? We've been hearing the gig economy. What set of persons make up the gig economy, sir?
Okay, you said I'm the expert, but I will do my best to give me a good idea of what the gig economy is. The gig economy is generally emerging spaces in our economic, landscape that generally leverages new tools. So they are economic subsectors that are not within the traditional economic sectors that we know, the typical 9 to 5, the typical industries that usually operate. I can give you an example today. There are copywriters within our spaces that do not do 9 to 5. You probably wouldn't know they are employed until they tell you, because they sit at home with a laptop and internet connection. They can actually do so much and add to the economic activities that are going on without anyone noticing. And the gig economy is also not just there to stay, but it's there really foiling the GDP quietly from, dark spaces and places where we don't look generally as tax people. So that is what I think the gig economy is. These are new non-conventional economic sectors that are emerging all around the world. Remote work, content creation, and so on.
Thank you very much. You have mentioned the list of these people, who they are within the tax net called the gig economy. How would these set of professionals, emerging professionals, be taxed? How would they be taxed? How would they be paying their taxes?
Yeah, well, for many of those that are within that sector, in the past, we've had question about their legitimacy and indeed whether these activities are taxable. We know that in Nigeria, at a point in time, the environment wasn't very friendly, for instance, to those that are within the crypto space.
Yeah.
Digital assets, cryptocurrencies, crypto trading, and so on. The environment did not really favor these individuals. And then generally, once you begin to put taxation on unlegitimized activities, then you tend to legitimize them through taxation. So it was a bit hazy, so to say, in terms of whether these people should be taxed, whether the activities are legal, whether the space is regulated or unregulated. That was where we were, a couple of years back with the new tax law. There are changes today that have made it very clear that these sectors are legitimate sectors of the economy. They have been fully incorporated, and the tax law has provided provisions to regulate these sectors and to tax them. So yes, we will tax them basically as they fall within various income brackets, because taxes are generally on economic activities and based on income. And then we will also tax them based on their location and residency. So a crypto trader in Lagos paying his personal income taxes if he is not registered as a company should pay his taxes to Lagos Internal Revenue Service. And likewise, if a crypto trader or a digital asset holder in Kaduna earns gains on such digital assets, they should pay their taxes to the Kaduna State Internal Revenue Service. But where they are registered companies, right, then it means their taxes will be based on company income tax regulations or laws, and that will go to the Federal Inland Revenue Service, within the jurisdiction that they exist. So if they are resident in Kaduna, their compliance will be in Kaduna, but to the Federal Inland Revenue Service, which today we know as the National Revenue Service, the NRS.
Just to follow up on that, you've also made addressed one of the issues as to how they're going to be paying. Many of them have raised issues on where, to who are they going to be paying the taxes to. They've heard of the NIRS, they've heard of the state IRS, and for instance, for a graphic designer who is not having to do he doesn't have a company, he's not running a business per se, but probably has he gets his job from Fiverr and Upwork. How would that kind of person pay his tax? Where would he pay? What kind of taxes would he be paying, and to which of the?
Okay, so there are many things involved when you begin to talk about issues like that. There are issues around double taxation treaties that are cross-country, because if you're working on Fiverr, for instance, or Upwork, it means you are likely sourcing many of your jobs from offshore, from probably the US or Canada or any, of those foreign countries where you work, and potentially you may be taxed over there before your income comes in. But in many cases, most countries do have what we call the double taxation treaty across the country. So those will regulate where your taxes will be paid. Then I did talk about income, because taxes are not about precisely what you do or what you don't do. They are about your income. Once your income has reached the level where it should be taxed, then you should pay taxes on those income. Now, whether you work remotely or you work in traditional industry, the fundamental thing that needs to be understood is that you pay taxes based on your income. And secondly, you pay taxes to the tax authorities of the place where you reside. That is your primary place of residence, as we call it. Some of the people that work within the gig economy may also fall into the category of what we call the itinerant workers. Itinerant work simply means someone who moves around to earn a living, to earn his income. So let me give you an example today for, say, artists who are, and you may consider that too to be part of the gig economy.
Of course.
An artist who goes around to do exhibition across the country, and you may not be able to readily tie him down to a specific location. Throughout the year, he's on the move. The law is pretty straightforward about what number of days is required for you to be considered primarily resident in a location. So you must have spent at least half the year, which is 183 days out of 365, in a particular location for you to be considered resident. So you can take example of people who probably work in Lagos but live in Ota or in Ogun State, or people who work in Abuja, and then every weekend or Thursday or Friday they are off to Kaduna. So you need to now place where between those two places they spend the most number of days. That is their place of residence. Again, there is the concept of the significant economic presence. So even where you can claim that I am not primarily resident in a location, you can still pay taxes in that location once it can be established that you have significant economic presence within that location. And this is quite common with, for instance, say multinational companies that have brands and existence and business in Nigeria, and they may not have a specific local office in Nigeria. They will still have to deal with the 15% minimum tax rate based on the new tax laws that has been passed into law. And so these are some of the things that determine to who you pay and where you pay, right? So the general thing to note is this: if you are a company, a registered company, a limited liability company, or any other type of company that is by law considered to be a separate human being from those that, yes, that establish it. So you're a legal entity that can sue and be sued in your own name and can hold asset and so on. Then your compliance is to the National Nigerian Revenue Service, the NRS. That is where you pay your taxes. Largely your compliance is to them. However, if you are a natural human being, you are a person like me and you, our compliance are based on personal income. So it is regulated by those aspects of what used to be part of the Personal Income Tax Act, but now part of the Nigerian Tax Act or Nigerian Tax Administration Act. So largely individuals like me and you that are natural human beings will generally comply to the state revenue services where they are resident or where they are determined to have significant economic presence. So this is how you determine where you pay. Now, what you pay, again, will be determined by your level of income. And you may look at the income not narrowly, but broadly. So when we say broadly, or when we refer to it as global income, it means, for instance, and this is quite common, right? So take someone who is a graphic designer.
Yes.
He takes jobs, from multiple companies or individuals that pay him when he's done. He is not supposed to consider the fact that he gets his chunk of income from a particular source. So that is what is taxable. You can even take a case of someone who is within the gig economy, right?
Yes.
But does also what we call side hustle.
Yeah.
So he earns his salary.
A 9 to 5.
And then he
maybe
will do
does it
6 to 9, right? So it's 9 to 5, 6 to 9.
Yeah.
So he does his 9 to 5, and then he does his 6 to 9. So naturally, where he does his 9 to 5, will have to ask as tax agent to deduct and remit his personal income tax from his salaries to the tax authority. But that is not enough within the provisions of the law, because the law targets an individual's global income. So what does he earn from the 6 to 9 also needs to be added subsequently for his taxes to be assessed adequately or accurately. And then again, if that same person, for instance, has inheritance of real estate where he received rents from individuals that reside in those properties, then again, the income from rent should also be added. And then assume he's a graphic designer that puts up on auction a specific, canvas that he has worked on, and it's so beautiful and it brings in a couple of millions on the auction. That too is taxable. So it's 9 to 5 plus, whatever
Side
you
hustles.
make from the side that, adds up to become what your global income is. And that is what the taxman, basically targets as your income for taxation. Now, issues of reliefs now comes in. Prior to now, there were consolidated relief allowance provisions within the law that allows you to relieve taxpayers of, basic amounts from their income, and the rest becomes taxable income. But now the law has changed with the new tax law. Statutory deductions are allowed to be deducted before taxes are computed. So if you are in the NHIS, your pension contribution, if you are, you have a life assurance policy, and so on. All of those are allowed to be deducted before taxes are computed. And then
Doctor,
after that,
before you go on, you are making mention of something very important here, because we're seeing that this, then again, we use the same person, a graphics designer, who, you know, has his laptop is office. Whatever he does is he buys fuel for his generator to run it. You know, these are expenses that he's making, yet he doesn't have, is not registered as a company or a business entity as well. Are these set of people, it's a major question in their mind, are these set of people, do they have some level of deductions they could make on their end that would suffice?
Well, those are,
as you're speaking of this,
those are the ones that I am speaking about, the reliefs that are allowed for individuals before you get to the first 800,000 naira, which is basically tax free. And then you must also understand that the tax bands have changed, right? So, but before we come back to the tax ban, talking about the reliefs themselves, before now, some of these reliefs honestly did not exist in our books, right? So it's just the consolidated relief allowance. But now you can get relief on all your statutory deductions, from pension to NSITF to NHIS to your... in fact, if you are taking a property on mortgage, now your interest on mortgage is also relieved from taxes. And if you are renting, 20% of your annual income can be set aside as a relief to a cap of 500,000 naira, you know, whichever one is greater. Meaning that if you are not renting above 500,000 naira, you can actually claw back your rent from the taxman before your taxes are computed. And then because of those changes, the tax bracket has also changed. You know, prior to now, the tax bracket is between 7 to 24%, graduating at intervals. But for now, most of the people that will have been paying taxes from 7 to 14% may not find themselves paying taxes. You know, the tax bracket starts from 15 to 25%, which makes it a lot more progressive than what we used to have in the past. Except that as you graduate to a higher level of income, then the taxes become a little much more than they used to be for the particular taxpayer. So generally what obtains is that if you are a low income earner, you are most likely to pay between 0 to lesser taxes compared to what you were paying based on the old law. If you are a high income earner, say from 50, 60 million naira per annum and above, you are likely to pay more taxes compared to what you used to pay prior to the new law.
Thank you very much, sir, for that answer. And just to follow up with what we are talking about here, you're explaining to us that these deductions are there and real, and if they can understand it, they can put it.
Yes, yes. I think with the new tax law, what is really important for people to do is to really educate themselves about what the provisions are, what the reliefs are, and how you can take advantage of these provisions of reliefs. And it's not only for the individuals, but also for small businesses. Again, if you are, for instance, a small graphic designer, you may want to consider what is better for you, whether to stay as an individual or to register yourself as a small company that falls within the small and medium scale enterprise sector. Then that will also allow you perhaps to enjoy certain reliefs, you know, because the definition of a small business within the tax law is that where your income bracket is not above 100 million naira per annum of turnover, then you are likely to enjoy a lot in terms of tax breaks. And then for those that fall within the economic sector, the new law now describes them as economic sectors that the government are quite interested in incentivizing. And because the new law abolishes what we used to know as the pioneer system that used to be under the NIPC. Now it is within the new law that once you are in these sectors, you can enjoy up to 5 years of tax break and so on.
Oh, thank you so much for that clarification. We have, and let's look at the money aspect, because that's where it is. And you've earlier stated that is the income that the tax man is after.
Yeah.
Let's see what your income is like, and in what bracket does it fall under. But we have these people earning foreign currency. We want to know if the same bandwidth or progressive tax brackets that the new tax law has created, does it still affect these set of people that are earning in foreign currency, knowing that we have a volatile market? It's a fluctuating market. A minute we're seeing that the dollar rates are higher, the next is lower. How is the tax man or the tax authority seeming to address this kind of
Generally, I think within the old system, prior to, I think, about 4 or 5 years ago,
yes,
if you earn in dollars, you're expected to do your taxes in dollars and pay in USD. So you do not have to deal with issues of exchange rate and exchange rate volatility, even though we can even argue now that there is some level of stability in the foreign exchange market compared to a few years ago. However, the regulations are quite clear now. You are allowed to pay your taxes in naira even when you earn in foreign currency. Now, with respect to what becomes the exchange rate, that is something that is also regulated for what exchange rate applies, because as far as we are concerned, in Nigeria today, we have abolished the parallel market versus the official market dual exchange rate system, right? So we run on basically what is a single exchange rate system, which is what will become the basis for your foreign currency conversion for the purpose of taxes. But notwithstanding, the regulation is clear. You are allowed to pay in naira even if you earn in USD.
so we're saying if this graphics designer every month earns about $2,000, it will be converted to naira, and then you see if you fall within that tax bracket.
Interestingly, it is expected that the taxpayer will do the conversion. It is expected that the taxpayer will assess his income. It is expected that the taxpayer should have the ability to do some of the computations. And if he doesn't know how to do it, it's not a problem, because I think there are many hands-on tools out there that can help you to do the computation. All you need to do is to supply your information, and then it can compute for you and let you know where you fall and perhaps what taxes has become due on that income. Because you see, since around 97 or so, I think Nigeria has transited to a regime of taxation that is based on voluntary compliance. So it's self-assessment and voluntary compliance. So yes, indeed, people are expected to assess their income and be able to reach, the point where they can tell themselves, oh, this is what I think my taxes are, and then do the compliance all by themselves. The beauty of it is that more and more the revenue services across the country, the NRS and many of the state revenue services, are providing digital tools that allow this to be done seamlessly from the comfort of your home and without much trouble. So yes, I think the taxpayer is expected to be able to do these conversions and know how much they are going to pay. Just to add one thing, just for clarity, when taxpayers do their compliance, and we often will define compliance in very simple terms to mean paying the right amount, paying at the right time, rendering information that is accurate, and paying to the right authority. Because even if I am able to do the computations correctly and I pay within the time that I'm expected to, but I'm paying to the wrong tax authority where I'm not resident, then I will still not be considered to have complied, right? So when we come to assess compliance, it is also expected that one of the documents that the taxpayer will file are their annual accounts. So if you are not a salary earner, you are doing business, you are supposed to at least render some account of your affairs for the year to show how much was your income and how much of that has become, taxable, or what amount of taxes has been deducted from that income.
Interesting answers, Doctor. Let's go to another interesting angle. We have looked at the digital, the graphics designers, those who get their work on Fiverr and Upwork. Let's look at these set of individuals who are called the influencers, the social media influencers, the social media content creators. There has been a rise and a surge in that kind of business. And I'm sure the tax authorities are also keeping their eyes on them. What method or what means is the tax authority trying to track their lifestyle, for them to pay their taxes?
Okay, so interestingly, within the gig economy are the content creators, and I think content creators globally, content creation has become really a big industry.
Of course.
People like Mr. Beast are out there doing hundreds of millions of dollars annually in terms of revenue. And many of these content creators, if you note, have found ways to flip content creation and the large followership that they have on social media into merchandise and things like that. So you find them mostly in two spaces, the content space and also the e-commerce space as well. So many of them take advantage of their large followership and just, begin to sell items, online.
Get endorsements.
So one of the things that is very clear about content creators, for some of them, I don't mean all of them, is the fact that it is sometimes not so hard to do lifestyle audits on them, because a lot of times that is also what goes out there as content. So he gets a new car and it goes on
social media,
TikTok
TikTok or Instagram.
Yeah, he's bought a new Lexus or he's bought a Ferrari or something like that. And the taxman should be looking at those things, because those are lifestyle activities that are indicative of income, level of income. And it doesn't make sense to me as a tax person when I saw that last week on your content page on whichever media, you've bought a new Bugatti or a Ferrari that is worth 100, 200, 300 million, right? And then when you come to file your income, I see a gross income of 50 million naira. So lifestyle audit becomes one of those means through which it is easy to, assess from afar what the content creators earn and how much in taxes they should be paying. But also, again, now digital tools for tax administration are really becoming a thing and very useful. And integrations can work between our tax administration system, the e-tax system that we have, and the digital platforms that are out there providing platform for content to be consumed, to be sold, or to be monetized. So for instance, if you take YouTube, for instance, which is, primarily the content platform that, came up perhaps first, you will find that how much people are making on YouTube is well documented within the YouTube system.
Yes.
And the tax system in Nigeria can basically integrate for every taxpayer that is within Nigeria, that is a content creator within the YouTube community, for us to get that information from YouTube to be able to know what precisely their income from YouTube is. But then you may have to do that across perhaps tens of platforms, because most content creators will leverage YouTube, X, TikTok, all the way to podcast platforms like Spotify and the rest of them. So you need to be able to track all those platforms for you to know how much they are making from all of those platforms, for you to be able to come down to what their global income is. That is a more technical approach to
it's this aspect you just raised is interesting. So is the NIRS ready to begin this kind of processes?
Yeah, well, I wouldn't say particularly ready, but yes, the country is moving towards that direction. And I will give you one or two examples. I think of late there are some social media content creators in Lagos that we are slapped with some heavy tax bill recently.
I was waiting for you to address that.
Yes, and then those were just off the back of the things that they did put out there in social media about their lifestyle, and that determines or gives an indication of the level of income where they are, for the LRS to say, okay, we think this is what is fair for you to pay. And we will continue to do that until now the question you just raised is answered, and it's answered adequately. Where, for instance, we get to the point where there's full integration between our systems, the NRS systems, and these other, third-party platforms that are out there. The work is being done as we speak. The NRS, I think, has already launched the new platform for tax administration for the country, if you want, which is the Rev 360. Rev 360 is basically what the NRS is implementing. And Rev 360 will generally plug into as many sources of information as possible to, allow us to collect sufficient number or parameters of data about individuals to assess them fairly. But likewise, the Joint Revenue Board has the bigger mandate when it comes to data and data mining and data warehousing and data sharing across various IRSs across the country. And I think some 3 or 4 years ago, the GRB, then JTB, launched the Tax for Data project, which has progressed quite well to this point. But with the new tax law and its requirements for digitization and use of data and so on, the impetus has become more to drive that project to the point where it becomes very beneficial for tax authorities to be able to leverage data to assess adequately. Now, whether the system is matured and ready or not, I think at this point, that is not the most relevant thing. The most important thing is that the system is being built and it is moving in the right direction. The number of integrations that the systems or the system will require are enormous, that it will take quite some time for you to get to the point where you think. So imagine this. Imagine having to integrate with all the payment service providers in the country. Imagine having to integrate to all the banks or that exists in the space. Imagine having to integrate with Corporate Affairs Commission so that you get data for all the companies and business names that are registered. Imagine having to also integrate with NIMSI, because now the new tax ID is based on the NIN, right? Yeah. So Yeah. So for you to have the proper digital identity of all your taxpayers, then you need to ride on the NIMSI database. Then imagine having to integrate with vendors across the country, because now fiscalization is a thing within the new law, and it
Yes.
requires that, basically every vendor must issue the e-receipts. And then going all the way to integrating with all the digital exchange that are out there, Binance and the rest of them.
Yeah.
Then imagine having to integrate to, the back end where the money is, in the social media platforms, right? So it's a huge amount of work that is required in terms of getting data to be able to do what we do. Like I said, my belief is that we'll get there, and we'll get there sometime in the future. Now, how quickly we get there is a matter of how hard we work now. And I think the hard work is being put, especially on the side of the state revenue services across the country, the Joint Revenue Board and the Nigerian Revenue Service. So we'll get there. But for now, we keep working.
Thank you very much, sir. We have come to the end of our time today on Open Mic, but not the end of this conversation with Dr. Lawal. You still have a long list of questions you sent and need to be answered. So join us to continue this conversation. If you have questions about taxing the gig economy, scan the QR code on your screen and send us your questions. To ensure that you don't miss the sequel, subscribe to our YouTube channel and follow us on all social media platforms displayed on your screen. Stay updated. I remain your host, Dolapo Obafunmi, and I'll see you next time.